Hello, and welcome to House Lux Estate, your reliable source for all things finance and real estate. Here, we strive to arm you with the best strategies to navigate the often confusing world of finances and property. Today, we're diving into a topic that touches many of us, managing student loan debt. We understand it can feel like a mountain to climb, but don't worry, we're here to guide you. Stay tuned to discover top tips on managing student loan debt effectively. Student loan debt can be a heavy burden, but understanding it can lighten the load. So what exactly is student loan debt? Simply put, it's the money you owe after borrowing to pay for your education. This can come from the government, known as federal loans, or from private lenders. Both usually come with interest, which means the longer you take to pay back, the more you'll end up owing. Now, why can student loan debt be problematic? For one, it can hinder your financial growth. With a significant portion of your income going towards loan repayment, you may find it challenging to save for other life goals, like buying a house or starting a family. Moreover, if not managed properly, it can lead to a vicious cycle of debt that's tough to escape from. But don't let this scare you. The key here is effective management. Just like any other debt, student loan debt is manageable, provided you approach it with a plan and discipline. It's crucial not to ignore it, as doing so can lead to severe consequences, including damage to your credit score, which can affect your financial life down the road. So, it's important to face student loan debt head-on, understand your repayment options, and develop a strategy that suits your personal circumstances. Now that we understand what we're dealing with, let's dive into some tips on managing this debt. Tip number 1, create a clear and realistic budget. This is a crucial part of managing your student loan debt. You see, budgeting is not just about crunching numbers. It's about understanding where your money is going and making conscious decisions about how to control it. Let's break it down. First, list down all your sources of income. Then, detail out your monthly expenses, including your student loan payment, rent, groceries, utilities, and any other recurring costs. Don't forget to set aside some money for savings and emergencies, too. Next, compare your income with your expenses. If you're spending more than you're earning, it's time to make some adjustments. Perhaps you could cut back on dining out or look for ways to earn extra income. Remember, the key to a successful budget is consistency. It might be tough at first, but stick with it. Over time, you'll see the benefits add up. A good budget is the first step towards managing your student loan debt. Tip number 2, consider debt consolidation and refinancing. Now you may be wondering, what exactly are debt consolidation and refinancing? Well, let's break it down. Debt consolidation is when you combine multiple student loans into one bigger loan. This can make your payments more manageable by having one fixed monthly payment, instead of juggling various payments at different interest rates. It's like putting all your apples in one basket, but in a good way. On the other hand, refinancing is when you swap out your existing loans for a new one with different terms, usually a lower interest rate. This could potentially save you a considerable amount of money over the life of your loan. It's like trading in your old car for a newer, more efficient model. So how can these strategies help manage your student loan debt? By consolidating your loans, you can simplify your repayment process. And by refinancing, you could lower your monthly payments and overall interest, freeing up some cash for other financial goals. However, it's important to note that while these tools can be effective, they may not be suitable for everyone. For instance, if you refinance federal loans with a private lender, you might lose out on certain benefits like income-driven repayment plans or loan forgiveness options. Therefore, before you jump into consolidation or refinancing, make sure you do your homework. Understand the pros and cons and consider seeking advice from a financial advisor. Consolidation and refinancing can be effective tools for managing your debt, but they're not for everyone. Always do your research. Our third tip, prioritize paying off high-interest loans. Let's dive into the nitty-gritty of this strategy. When you're dealing with multiple loans, it's easy to feel overwhelmed. But here's a way to simplify things and potentially save a lot of money in the long run. This approach is called the avalanche method. Imagine you're standing at the top of a mountain, looking down at a valley filled with snow. The snow represents your loans. The deepest piles of snow are your high-interest loans, and the shallower ones are your low-interest loans. Your goal is to clear the valley by causing an avalanche, and the best way to do this is to start with the deepest snow, your high-interest loans. So, how does this work in real life? You continue making minimum payments on all your loans, but any extra money you have goes towards the loan with the highest interest rate. This strategy can save you money over time because you're reducing the amount of interest you'll end up paying. Now, this might sound counterintuitive, especially if your high-interest loans also have larger balances. It may feel like you're not making a dent, but remember, it's the high interest that's causing your debt to grow. By targeting these loans first, you're stopping the snow from piling up. By tackling high-interest loans first, you can reduce your overall debt faster. Tip number 4, explore loan forgiveness programs. Now, you may be wondering, what exactly are loan forgiveness programs? Well, these are programs that, under certain circumstances, may erase part or all of your student loan debt. Sounds like a dream come true, right? So, how can you find out if you qualify for one of these programs? There are various types of loan forgiveness programs available, each with its own set of qualifying criteria. For instance, some programs may offer forgiveness to those who work in public service jobs like teaching or nursing. Other programs may be available to those who serve in the military. There are also income-driven repayment plans that can lead to loan forgiveness. Under these plans, you pay a certain percentage of your income towards your student loans for a set period of time, usually about 20 to 25 years. After this period, any remaining balance is forgiven. But before you get too excited, it's important to note that not all loans are eligible for these programs. Typically, only federal student loans qualify, and not all public service jobs are considered equal in the eyes of the loan forgiveness programs. Also, remember that forgiven loans may be considered taxable income, so be prepared for a potential tax bill. Loan forgiveness programs can provide significant relief, but make sure you understand the terms and conditions. We've covered some important tips today on managing student loan debt. Our journey began by understanding student loan debt. We delved into the details, unraveling the layers, from the types of loans to the intricacies of interest rates. We discovered how knowledge of our debt can be the first step towards effective management. We then moved on to the critical process of making a budget. We emphasized the importance of tracking our income and expenses, and how allocating funds to repay our student loans can lead to financial freedom sooner than we think. It's all about taking control and being proactive. From there, we navigated the world of consolidation and refinancing. We learned that these options can potentially reduce our monthly payments and overall interest, making our debt more manageable. But we also stressed that these are not one-size-fits-all solutions, and careful consideration is needed to understand if they're the right fit for us. We then explored the strategy of prioritizing high-interest loans. We highlighted that by paying off these loans first, we can save money in the long run. It's a strategy that might seem daunting, but with careful planning, it can significantly reduce the amount we owe over time. Lastly, we delved into forgiveness programs, a beacon of hope for many. We talked about the different programs available and how they can forgive a portion or even all of our student loan debt under certain conditions. We reminded everyone to research thoroughly and consider seeking professional advice when exploring these options. We hope this journey has given you valuable insights and tools to manage your student loan debt effectively. Remember, the road to financial freedom isn't always easy, but with the right strategies, it's certainly achievable. Thank you for joining us at House Lux Estate today. Remember, managing student loan debt is possible with the right strategies. Don't forget to subscribe for more helpful financial tips and tricks.